Welcome to the Stock Option Assassin's free Trade of the Week video. My name is Eric, and in this video we're going to take a look at the RSX, which is the Market Vectors Russia ETF. And what we're going to be looking at is entering into a longer term play on the RSX. So first of all, I have a weekly chart up, and I'm looking at the RSX now. You can see obviously the RSX has been in a downtrend for the past couple years. This is back in 2011 is at the begin or the first part of this chart. But over the past year and a half or so, 2 years, it's actually been kind of range bound, and the top of the range has been in the low 30s. We'll call it $30, $31. And the bottom part of the range until recently has been in the low 20s. We'll call it $23. Now, obviously, a lot of, it's still in the news, the whole Russian Ukrainian Crimea situation. And over the past few weeks, the RSX has really taken a dump. And this really wasn't dumped because of economics. It was dumped because of geopolitical crisis and all the sanctions and all this stuff. So what I want to look at is a longer term play in the RSX with the idea that this thing will eventually kind of rally back up to its previous high. Now, do I think it's going to break out to new highs? Probably not. But I do think it's at the bottom of the range. And if we go far enough out, if you're going to play options, then I think we could participate in any kind of rally. Even if we get back to the middle of the range, let's say if we get back to, we'll call it $26, but right now we're at $23. I mean, that's a 10% move, over a 10% move in the stock. So there's two ways I think we can play this. So first of all, you can buy the stock, or excuse me, buy the ETF. It's $23. You can buy 100 shares, put out a couple grand or whatever. But the other option that I'm considering and looking to get into are some longer dated options. So let's take a look at the option chain of the RSX. I'm going to open up the January 2016 option chain, and I'm going to switch over to volume open interest. So first of all, what I like going slightly in the money. If you go slightly in the money, the closer you get to a delta of 1, then the closer to a stock replacement strategy that this would be. So I like the idea of going with about a delta 70 option, and that's going to put us right around the January 2016 21 calls, and we also have a decent amount of open interest there already. So if we go back to our delta, our Greeks, you can see that puts us at a delta of 68. So I like this in the money call option. I would not obviously, buy as many as if you do 100 shares at $2,300, I'm not going to just replace that with 4 contracts here of options. But with a couple options, if this thing can move to our desired range of about $26 to $30, this would actually be a money doubler and possibly a tripler over the next year or so. So again, I'm looking at the January 2016 21 calls. Right now they have a delta of 68. You can get them for about $4.50, give or take, and that's it's about $400, $450 per contract. The way I would manage this is, first of all, since it's such long dated, I'm going to go in with the idea that if the market doesn't rally over the next year and a half, then I would lose the entire position. So for me, this is more of an all or nothing position. So I'm going to go in with the idea of I'm going to risk 100% on these calls, but I'm also looking to make 200 or 300% if we can rally back up over there in about a year. So again, longer term play on the RSX. Again, we're at the bottom of the range. Obviously, our weekly chart, where everything's kind of oversold. Doesn't mean much in the political climate. If something happens, this thing could go much lower. But I'll be positioned for that with the idea that this thing will eventually come back up into the mid 20s, and potentially greater if the stuff gets smoothed over. So hopefully that helps. If you guys have any questions, let me know, and we will see you at the next update.